Hello, my name is Nick Quinn.
Hi, I'm Connor Woods.
Hello, I'm Shane Vernier, and we're the market analyst team at howtotrade.com. Together, we'll explain everything you need to know about trading the shooting star candlestick. All right, let's get started.
A shooting star is a candle formation or pattern that occurs at the end of a bull move and tends to signal a potential rolling over or a reversal in that trend into a bearish move. It's a very popular pattern to trade, and it's very easy to spot in all markets on all time frames. It tends to be very distinctive because of the way that the candle structures form at the peak of the bull market. That tends to be that we get a very long wick. We tend to get a very long upper shadow on the candle right at the top of the market, and the range between the open and the close tends to be quite a narrow trading range, indicating a lot of compression as we reverse from one trend into another. So let's break down exactly how we'd go about identifying it. A shooting star is a very common candle formation that we'll see on all types of different price action charts on all sorts of different time frames. It's a bullish move acting as a reversal with a very unique candle right at the very, very top of it. Now, the interesting fact about this is the size of the wick to the upside. You barely ever get any wick to the downside on the candle right at the very top. It's all upper wick to the top, which is showing us how much pressure there is within that time range. The way that you would then look to trade this type of structure is you would obviously look to trade a reversal back to the downside, maybe trading off the break or the close of the candle, maybe trading under the low if there is even a small wick under the low of that candle. However, I've got to be honest with you, I wouldn't want to trade that specifically on its own. I would certainly want other tools as well to confirm it, whether it's a line of resistance in there, or maybe it's part of a Fibonacci setup that you are looking at, or even other momentum indicators or other indicators that you're using as part of your strategy. On its own, I would be slightly skeptical, but certainly in conjunction with other tools, it can act as a great confirmation of a reversal. That is the basic setup, and that is how we identify it on a price chart.
Okay, so let's look at how we can trade this shooting star candlestick pattern. And we're going to use it in conjunction with the relative strength index as well, the RSI indicator, just to give us that confirmation. So what we're looking for is a market which is trending to the upside, which we've got here. From back here, we can see we've been trending to the upside, and we're looking to try and catch this trend reversal by using the shooting star candlestick pattern. When I get my drawings on the chart, you can see at the end of this uptrend, we can see how this shooting star formed. We had this bullish candle to the left, and then the shooting star candle, where we had a wick to the upside, but pretty much a full body candle closure below, and that's the indication of our shooting star. Now, at the same time as this happened, you can see that our RSI indicator at the top was in overbought territory, which is above that 70 level. And when we're above that 70 level, that indicates to us we're in overbought territory and the market could be about to reverse. You can see that we get that second closure now below this particular neckline we have here. I can just draw that on for you. Below this level here, and you can now see that potentially as a trader, we'd want to short this market at the closure of this candle with a stop loss of just above the shooting star, and then we can really catch that trend reversal which we see here in the short-term direction, and we actually manage to get a maximum here of go all the way down to this level, this low. Then that's a really nice 6 risk reward trade, which is a fantastic trade from a shooting star candlestick pattern.
Okay, let's look at the pros and cons for the shooting star candlestick pattern. Underneath pros, the shooting star is a simple candlestick pattern to identify. It is a very reliable technical analysis indicator. Also, stop loss placement is easy to spot. Your stop loss with the shooting star candlestick should be placed above the highest level of the pattern itself. Lastly, the shooting star works well with other momentum indicators, such as the RSI and the MACD. A few of the key drawbacks. The shooting star pattern must be confirmed with other technical analysis tools. As a standalone indicator, it is not overly effective. And lastly, it can produce risky trades, as the trader basically sells the asset at the top of a trend, which can be problematic, specifically if you're fighting robust price action. Now, let's review some of the key takeaways from the shooting star candlestick pattern. Number one, The shooting star is a unique candlestick pattern that appears after an uptrend and signals a bearish trend reversal. Number 2, the shooting star reversal pattern has a long upper shadow, a short lower shadow, and a small real body. When trading the Forex using the shooting star pattern, confirmation is needed. 2 technical indicators that may help confirm the shooting star as a reversal indicator include the RSI and MACD. To trade the shooting star reversal, a stop loss should be placed above the highest level price of the shooting star candle itself. Now, if you want to learn more about the shooting star candlestick pattern, be sure to check out the How to Trade Trading Academy inside our trading room. There, you'll find a longer form tutorial where we'll show you how to fit the shooting star candlestick into your own trading methodology. We'll then demonstrate how to take that plan and trade it against real market price action. You'll have everything you need to practice and gain valuable market experience. Then, once you're ready, feel free to join our How to Trade Funded Trader program.